Hello, everyone. Welcome back for another episode of the Stock Talk podcast with Invest Like Mike. We have a really, really great podcast today. Two good friends, two guys that are really studying cryptos, actively invested in cryptos, and we're going to have a great conversation today. So I'd like to introduce my two guests today. We've got Adrian Louie and we have Paul DeAngelis, both Canadians. One of them living in Canada right now, and one of them is living in a little paradise over there. Paul, how you guys doing?
I wish I wasn't living in Canada, but I guess I wish I was.
That's for another podcast.
Yeah. Okay. Sorry.
No, that's okay. Paul, how you doing?
I'm doing good. Yeah, thanks for having us on. I'm in Costa Rica, and so it's warm everywhere. Canada's warm right now. It's always warm down here. So, anyways, yeah, it's let's gab. Let's do it.
Okay, so I wanted to do a podcast at this time because we're at a really big momentous time right now. I mean, that's my opinion. I know that's your opinion, guys. And we have some really, really, really big stuff happening in the market after a really rough year. And so what we're going to do is we're going to kind of go over what has happened, talk about the trade war, talk about Mr. Trump, and talk about all this stuff because, you know, I'm focused on cryptos. I run a crypto bootcamp video and all this stuff. My Invest Like Mike group, I focus a lot on cryptos because, you know, in the past 5 years, we've made the most money on cryptos and we've made money on other things, but I'm focusing on cryptos. However, just because you're a crypto guy, you can't ignore the news. And I know a lot of crypto folks that do, and we don't do that. You know, Paul, Adrian, me, we're constantly keeping up with the news, and I'm keeping my group informed on the news. So we're going to touch on some major subject matters that happened this year. We're going to have some good questions, and then we're going to end up touching on what just happened, which will bring up a really good conversation of what do we think is coming in the future for cryptos. So we're going to kind of wrap that all together. So let me just share the screen here quickly, guys. So this is my website here, folks, investlikemike.com. Check it out if you haven't already. If you want to check out Paul and Adrian, they did a podcast with me here. You could see their Human Intelligence podcast here on the screen. And they did a podcast with me if you want to check that out. And they've done some other podcasts. And they're very, very focused on, you know, the investment community and cryptos and everything like that. So feel free to check out the Human Intelligence podcast there. And for anyone watching here, if you are interested, I do run my weekly training session, the Crypto Boot Camp. I've got a bunch of people on there. I've guided people through this whole run here from the election onwards, and I've got a lot of good reviews going. If you want to join it, guys, just head over to the website, investlikemike.com, click the store page, and you'll see it listed here for the Crypto Boot Camp. Okay, so you know, we're talking about Bitcoin here, folks. This is a trading view chart. You see it's around $108,000. It actually just went up over 108,000 while we were talking there, guys. And not too long ago here at the top of the chart, if you see where I'm drawing my black lines there, we recently hit $112,000 right there. We made a new all-time high this year for Bitcoin. So what's going on? I mean, we're in a trade war. Bitcoin's hitting all-time highs. There's all kinds of drama going on. How do we interpret all this? So just a quick review for the audience in case you're not aware of the trade war, which is impossible, but we'll kind of explain it quickly. So earlier this year, we had a new president, Donald Trump, and hate him or love him, he's in power in America. And basically, he did what he said. He said he was going to start a trade war, and he did it. And you could see here that back in February, he did a trade war on steroids, they're calling it. It's might be the biggest trade war that's ever been done in history. And he put massive amounts of tariffs on countries around the world. He started at 10%, he went to 25%. China was being threatened with 145% tariffs. And this really screwed up everything in the world. Okay, steel tariffs, aluminum tariffs, car makers saying we're going to raise car prices, and all kinds of problems going on. And you could see here a picture of Trump with his big, beautiful reciprocal tariffs here. When he announced them, he had a big billboard and made a big deal about it. And he basically picked on most major and not even major countries in the world. And he slapped on some really, really, really big tariffs. And, you know, this is what we're dealing with in terms of what happened earlier this year, guys. So, you know, back when we were sitting here, I remember we were talking about this and I was talking about it in my group. We were cheering on Donald Trump coming in, politics aside. He's good for business. He's good for cryptos. He's the first pro-crypto president in the history of America. Joe Biden, Justin Trudeau, Mark Carney, all these folks are very anti-crypto. And Donald Trump comes in saying, we're going to make the U.S. the crypto capital of the world. So when he got elected, cryptos went crazy. They were going higher and higher and higher, and we were in a really, really bull market. Then the trade war started and everything started coming down. Why don't we start with Paul? Like, how did you feel about all that? Because I remember talking to you about how bullish we were making money, and the same president that we loved for that rally comes in and ruined the rally with the trade war. Walk us through how you handled all that.
Yeah, I wasn't too surprised, because if you said at the beginning, you said we as investors, and I think there's a difference between people that invest and people that just think they're investors. And so when you're an investor, you have to understand the macroeconomics behind things. And part of that was looking back at the lead up to before he was president. He was telling people before he was elected that he loved tariffs. He would say that with passion. He loved tariffs. So were the tariffs really a surprise looking back? Not at all, because he actually said it. I don't even know why people were actually surprised, because he actually said that on his platform, on his presidential platform, and then he got elected and he kept saying tariffs too, and he implemented them right away. He did what he said. So from a surprise standpoint, looking back, no, I wasn't surprised. And then to me, that's just a part of the bull run. If you look back at all bull runs, that's just what comes out in the news at a certain time. I mean, the absolute euphoria that we were seeing, because at the beginning of, what was it, November 5th or 6th or something like that, when he won, everybody was excited. And
I still remember that night. All three of us were talking. It was a show, because we just kept seeing the green go up and up and up, and it was a very exciting night. Bitcoin went up by a lot, and you know what? It almost went up too quickly in terms of technical analysis. I think it went up too quickly, and hence we had that long pause kind of after, because the markets had to digest that. But it did. Bitcoin had a huge surge exactly on that night, November 5th. And then I think 6th and 7th, there was some follow up as well, right? So that was a very exciting time for us. I still remember that very vividly.
Yeah, that was crazy. That was absolutely crazy. And then it ran up for like about 7 weeks, right? And what Bitcoin does, and you're right, it got seriously overbought. And as that happens, guess what? Trump comes in and says, boom, put the gavel down, and he said tariffs. And it's funny how that connects to what the charts were showing at the same time. So, was I surprised? Not really. Not really.
I don't think any of us were surprised, really, to be honest with you. I mean, that night of the election, I did a live stream for hours tracking the election. And when he had his victory, I was posting like 1 million charts to my group. And I was telling them, like, I'm adding to my positions. I'm buying these cryptos. We knew it was going way higher. And it's kind of like, I don't know, if you have a sport in your country, let's say the sport of hockey was illegal in Canada, and all of a sudden, a new president or prime minister comes in and said, hockey is legal now. Well, now they're going to be able to be on national television and sell hockey jerseys and hockey tickets. Obviously, you're going to make a lot of money investing in hockey. And when you had a president that was anti-crypto, and the whole world was basically anti-crypto, except like El Salvador, you have the biggest economy on earth embracing your investments. That's good for business. So what Adrian was referring to is we basically hit an all-time high and many, many, many more all-time highs for Bitcoin and other cryptos, and we were making money hand over fist. And like Adrian said, it was kind of, if it's too good to be true, it probably is. It was too quick. And I always use analogies with people, if Usain Bolt, the fastest runner in the world, right? No one would deny he's the fastest runner of all time, basically. But when he finishes running a race, he can't just keep running quickly. He's got to take a break, eat a sandwich, relax, and then come back and start racing again. So that's kind of what happened with cryptos after the surge. It took a break during the trade war. And now we're thinking that maybe we still have a bull run ahead of us. So it's actually very, very, very logical in that respect. But it surprised the hell out of a lot of casual investors, right? So that's the main thing.
And it can get scary too, right? When you are, down, going down, 30, percent on Bitcoin, especially if you buy the top, right? But it can be very scary, and the markets were very fearful. Again, I remember during the trade wars, the markets were very, very fearful. But as Mike was saying, it's important to kind of understand the fundamentals and the news behind it. Or understand the fundamentals of Bitcoin, just because we had our thesis and we weren't really shaken up by the Trump trade war, right? Like, we knew this was going to happen, and this was all just part of the process. And we didn't really get shaken up by that, because we knew, long term, the chances are it would continue going higher, which we are pretty much right now. Yeah.
And as fast as it went up, it went down too. I mean, that was a hell of a capitulation event that happened. I mean, we went from 109 down to 74.
74. Yeah.
74. But again, we look at the market, we look at it from a market structure standpoint too. And we knew there were certain levels. And if you look back and you go back to, what was it, in March, from the ETF hype, the Bitcoin ETF hype, it peaked in March 2024 at about 74. So we knew that there was some major market structure there, because it consolidated from March 2024 pretty much right till November.
Yeah, the election. Yeah.
Right. So we knew there was a lot. So, we, again, going back to it, we weren't too worried about it. We look at this as an opportunity, because we sold near the top, and we rode that down in cash, and then we were able to buy back in at very cheap prices, and then if you look at it, it rose, and it's almost, if you look at the recent events, it's really,
that was the pause after the ETF news.
So this is the ETF rally I'm drawing, and I'm trying to show what Paul's talking about for the viewers here. So we had a big rally up, and we went up really big time, and we came down pretty significantly. We actually came down to about, $55,000 or $57,000 there. And what Paul's talking about is that when we went up right here with the Trump pump, the Trump election victory here, what he's saying is when we came down here, you could see we dipped. We actually rested kind of right here in that area that was built up from the ETF rally. And this is where using chart analysis comes in handy, because what we're doing, I can speak for the three of us here, we're watching these type of levels where it hung out for a while. I like to say when you're playing pinball, it kind of bounces around in this area for a little while. So when we dipped after the election here, notice where we stopped. We stopped, right in this same area, basically, where Paul pointed out. This is where we had support previously. So when other people were screaming and saying, holy crap, what's going on? We were saying, no, like that's just the same area as before. And we were calm about it. And one thing I always tell people is this, the bull markets and the bull rallies are nice, okay? But they happen a little more gradually. Like we say it was fast, right? But the bull goes up the stairs and the bear jumps out the window. So, you go up for a few months or a couple months, and then you fall in a couple of weeks or a few weeks really quickly. So it's really true. The bull goes up the stairs and the bear jumps out the window, just like stocks in 2022. They came down really quickly after a 2-year rally. So it helps us not to be emotional when we view it in a more logical way. And I think that's helped all three of us. Just for the audience too, I talk every day with these guys. We're cracking jokes. We're talking Bitcoin. We're showing our meals and all that stuff. But like, we keep each other calm and grounded. We trust each other. We're looking at the charts. If there's a news item, we're sharing it with each other. For the audience out there, if you don't have a good group of people like this, I suggest you try to find a few people that you really trust and align with, because you want to take emotion out of the equation. And obviously, if you're in my regular Facebook group, Invest Like Mike, I help bring more of a calming, realistic spirit, and I try to be as honest as I can with people in there as well. So, Adrian, so you're in Canada. Paul is from Canada, but he's been in Costa Rica. And why don't you tell me, like, so this is why I'm asking the question. So Canadians hate Trump, generally speaking. Like, they really hate Trump. And I don't love Trump. I hate some things about him, but I like some things as well. So when the three of us are interpreting this stuff, we're not messaging each other saying how evil Trump is and being all emotional. We recognize that there's bad things about him, but we're still treating this like a business when we're talking about the investments. When I talk to my Canadian friends, even the investment-minded ones, in my experience, they hate the hell out of them, and like, they can't even focus on the logic of the investment. They're just kind of hating on Trump and expecting it, markets are going to keep crashing. We're not going to recover from this. What's your perspective on that, being surrounded by Canadians, and then you're speaking to me and Paul separately? What kind of an experience did you have, like, trying to talk about investments and Bitcoin with those around you?
Yeah, as you were saying before, like, if you get caught up in the emotion of liking Trump or disliking Trump or his policies, it's hard to, it's almost overwhelming in information overload, right? So the way we kind of view Trump and his actions is basically how is it going to either help or hurt the markets, and maybe it's a little selfish that we're just doing it just for us, but I mean, that's what we have to do, right? We have to look out for each other, look out for ourselves, and kind of cut through the noise. And yeah, so we have to really just try to put the emotion aside. Whether or not we like or hate him, it's irrelevant, right? What's actually happening is the most important, right? And how it affects the markets. And so I think that's the most important part. And I try to stick with that when I do talk to my friends out in Canada about crypto. Even I have some friends who, like, I have an engineer friend who doesn't really love the idea of how much energy like Bitcoin takes, like the energy consumption required to run the Bitcoin network, right? And he doesn't love that idea as an environmental engineer. But like, we have to remind, okay, well, that's what makes the whole network secure, right? And maybe one day there might be a more energy efficient way to kind of run the network, but this is the way it is right now, and this is why we like Bitcoin, because it's a secure network, it's decentralized, right? We like all these features of it. Yeah, there's a cost of maybe the power that's required. But anyways, like, again, I might be for climate change, I might be against climate change, I might be, but this is just the reality of the situation, and you kind of have to kind of understand how it affects the markets and how it affects your fundamental case, right? Of whether or not you actually think Bitcoin has longevity or not, right? So it's all about, yeah.
Wasn't that debunked? Wasn't that about the energy debunked, as far as, like, even last cycle, as far as they would say, if you look at the Christmas lights that the United States puts up on a seasonal basis, consumes more energy than the Bitcoin network. I remember.
Oh, really? I've never heard that. I've never heard that before.
If you look at it, I think that was actually debunked. Like, I haven't heard that as any FUD toward Bitcoin since like 2021, or 2020, 2021, 2022 type thing, where it takes too much energy. I haven't heard that at all. So, when you're talking to your friend, I'd actually like have him. I'm sure you can find information on that readily available, because what I understood is last cycle, so we're talking like 4 or 5 years ago, that was something that came up a lot, and people, especially with the climate change era that we're in, and so many people being very passionate about that. And all of a sudden now there's this Bitcoin network that's supposed to be consuming so much. How can it be good for the planet? How can it be good for the future? We want it to be a global reserve currency, and how can it do that if it's going to be this huge energy consumer? And they actually did some research on it. There's a lot of research done on it where they were actually saying, oh, the washing machines in the state of Georgia consumes more energy than the Bitcoin network. So that'd be interesting to look into down the line and follow up on that topic. But I think that's been debunked, and that's why
that's interesting. Yeah, I've never heard that, but I think that just came up because he, as a professional, is an environmental engineer, right? But again, it's just like it comes down to cutting through the noise and just understanding how it all really affects.
Look at the noise today. So today, Bitcoin fell like three grand, 3 grand, something like that. Like people freaked out because all of a sudden there was this old wallet from like 2011, 2012 that activated. That we're talking like the Satoshi era. We're talking like these 80,000 Bitcoin worth $8.8 billion. So everybody was freaking out because they were going to say, oh, they're going to sell it. And so Bitcoin's going to drop in price considerably. That's going to move the market. It's just constant little FUDs that come out, and every time this FUD comes out, the price has already dropped, and it shows some weakness in the charts. The charts always show strength before the news comes out of good news, and then the charts always show the weakness before the bad news comes out. Right? It's amazing how that works. Like when we were talking about the tariff wars, the trade wars, we saw that Bitcoin was at, even the sentiment, if you look at it, was at extreme greed. And that's an indicator of sell your bags, But to go back to what Mike was saying, if you get blinded by, as an investor, if you get blinded by politics, then you got to spend a little bit more time investing. And I'm not saying that I by no means have been long in the game, but I refuse to be blinded by a right wing or a left wing of the same bird. So, and I don't want to get too deep into politics myself because it can open up a very visceral conversation and have a visceral effect, like it does with a lot of Canadians. You mentioned Trump, and their blood starts to boil. And if they're in the investment game, then they're missing out because, again, it goes back to they're getting too emotional. When you get emotional, you're going to make bad decisions, right? You're not going to see it. And so if you look at the crypto industry as a whole, well, Trump is who you want in office over the other option that was available to the American constituents in November. They were going to just prolong more pain. And, Bitcoin tends to overrule or override, I guess, politics, because it had a bull run in when Biden was president, and that wasn't necessarily a pro crypto president. So you look at all that, you got to just see it for what it is. That is just the noise, like you said, Adrian. It's just noise. Who's president? Who gives a crap? Are any of them? Is any real politician fantastic? Not in my eyes. And if you look at it from that neutral perspective, then you can actually see things a little clearer, and then you can make better decisions. And if we're talking about investment game here, well, make better decisions, because then it's going to influence your life in a positive way. How is that bad?
Sorry, aren't the Republicans known for like being more fiscally responsible?
Yeah.
Compared to the Democrats? Because again, I don't know if it's appropriate time to talk about the big beautiful bill that was just passed, but that does not seem like a fiscally responsible bill, because it's supposed to add about at least $3 trillion to the deficit.
And it's not going to be at least, it's going to be more.
Right. Totally. And again, fundamentally, like again, you can love him or hate him, you can be right or left, but it doesn't matter. What we know is they're printing money, right? And when they're printing money, they're devaluing the currency, and because of that, we know that Bitcoin has a brighter future, because it's a neutral asset and it's a hard asset, and it'll go up in value as the money printing continues on, right? So as Bitcoin investors, we'd actually be worried if whoever was in power was really fiscally responsible and maybe starting to cut back on government spending and not printing anything, right? It doesn't matter who's in power, what party's in power, but if they were going to take actions like that, then we'd be concerned as Bitcoin investors, because Bitcoin then has less validity, I guess. So yeah,
I think you know what, Adrian? I think it's actually the two parties are closer than you think when it comes.
Yeah.
Traditionally, you're correct. The old guard of the Democrats would generally spend a little bit more, and then the Republicans would be more fiscally responsible type thing, right? They would hold back, and that's how you would see it within
Balanced budget and all that.
the balance. But if you look at any red blue president over the last, let's say, maybe if this millennia, let's say 20 years, they're all printing money. They're all printing money at insane levels. And that's why, we went from, where are we at now? Like 37, 38 trillion when I say we. But, I say we because it really is a global economy run by the Americans, okay? Global reserve currency. So when I say we, I say it, I'm not American, but I say it as we're connected to it. So $38 trillion, if it's not there, it's really close. And this bill is going to push it over 40 billion very quickly.
Trillion.
Sorry, 40 trillion. Yeah. And I don't even think people understand how much $1 billion is, never mind 100 billion. Then I don't even think people understand. I don't even think I fathom it that much as well, but how much $1 trillion is, never mind 40 trillion dollars. So, and that's been done. It doesn't matter if it's and this is what I want people to remember when in our discussion here is it really about Trump? Is it really about Trump? It's not. It's not about a red president or a blue president. And when the Canadians get red hot when people mention the word Trump, they're being very immature about it. Okay, I'm not saying you can't dislike the guy, and I'm not a big. I think it was better that Trump got in power, in my view, than the other alternative. That's my view, and I'll say that to anybody of the two choices that were there. But and the Americans mandated it. They basically went red. They mandated it. So it's not like he did it illegally. And they say he's a thief and he's a criminal. I think all politicians at some point to get to that level are criminal in some way.
Totally.
You just have to see it for what it really is, and that's why there's a level of immaturity to people. And I'll say this as a Canadian, to the Canadian population as a general. I'm not saying it's you. I'm talking generally the people, and people probably listening to this podcast are probably looking for an outlet of maybe, I hope, some kind of like different viewpoint. Because it's a dangerous thing for the people if you get so bent out of shape by one person, one policy. It's all the same. It's all the same. The next president, if he's going to be blue president, and if it's a female or male, it doesn't matter. They're going to continue to print money until something changes or until something drastic terrible happens that the system has to change. And we're probably getting close to that. But that's another discussion.
One thing I want to say is, I do agree with you guys. And, if we're having a discussion about sports cars and you have a really powerful Lamborghini and a really powerful Ferrari, and you say, well, the Lamborghini burns a little less gas than, okay, they're both sports cars. They both burn a lot of fuel. So I've had people say to me, oh, the Democrats are better at not spending. Oh, they both suck. Actually, like they both are Lamborghinis and Ferraris when it comes to money being spent. And to argue which one spends more is kind of a silly discussion. and I think it's not reality. And even another discussion too. Are you guys able to see me here on your screen, guys? Yeah. So, this is my phone right here, okay? And I'm on my laptop, I'm on the internet, I have a webcam up. Does Bitcoin require electricity? I'm sure it does. But so do all these things, producing them, running them, powering them, like AI robots and AI taxis are being built. That's just the world we live in. So, I'm not promoting it. It's just the way it is. And we want to talk reality here. So Bitcoin has a lot of efficiencies to it. It can create a lot of financial freedom from it. And the internet and other things, our phones, right? They all require energy, but we use them in our lives. I think one of the reasons why Bitcoin gets more criticism is almost nobody uses it yet. And probably back in 1992, people were worried that the internet and computers would use too much electricity and don't play video games for too long and all that stuff. And I think when mass adoption comes and it becomes common for people to invest in Bitcoin, right now only 3% of people have Bitcoin. Okay. And when that becomes 30 or 40 or 50 or 60%, I think people will say, wow, I need this. It's important, like my cell phone. And then you won't hear complaints anymore. So, again, I think it's important to be unemotional and be realistic about this. And like I said, with Trump or with Biden, they both spent a ton of money. And the new prime minister in Canada is ready to print a bunch of money. I mean, all leaders in G8 nations are doing this. And I think it's important to kind of restrain your emotions when you're viewing these things, because otherwise you're just going to be chasing shiny objects. And, some people might look at this. I've had people say, oh, like, you're being greedy, you're benefiting from this stuff. Everyone invests, basically. If you have the capital to invest, you have mutual funds, you have stocks, you have a rental property. We're all doing that if we can afford to do it, right? And us being in cryptos, or like, when we went towards cash when the trade war started, I always tell people we were wearing our financial seatbelts. Okay. And if you're driving a car and you're not wearing a seatbelt, you can get hurt. And if you're investing and you're not wearing a financial seatbelt, you can get hurt. So we're just protecting ourselves by investing in stocks and cryptos and going in and out in an opportunistic way. And I think that's a really accurate way of putting it. So
Sure.
yeah.
But hold on a second. I'm curious about something. You actually get feedback like that? Like you're greedy because you invest? Is that you get that?
Well, okay, so I don't know how to interpret this exactly, but so there's times like in January of this year where I very publicly told people I went cash and I shorted the stock market. And I had some people that told me, oh, you can't predict that. You don't know which way it's going. And then when it happens, they're like, you just got lucky and you were just being greedy and you're benefiting from the
Oh, okay.
situation.
Yeah.
And I'm just saying to myself, like, why would you say that? Again, like you're wearing your seatbelt.
I got to be honest with you. That again, talk about a level of. I mean, you're kind of I guess you have that influencer type badge, right? So people follow you, they follow your plays, and so on. So that's sort of what you have to do, I guess. Is you need to be public about some of the moves you're making to your community of people. And I think, and I do think, I do think for anybody that's getting new into investment, you do have to surround yourself. If you try to do this by yourself right off the bat, especially in the volatile crypto world, you're going to
You're gonna get burned.
you're going to get so wrecked. And that's part of it. That's part of it because you can't deal with the volatility. So then your emotions come into play, right? And then if you have a grounding network people, then you can really be a newbie and you can benefit from that volatility in big ways. And that's all it is. That's all you did when you went public, as you said, the thing ran up, I'm selling. Like that's what you're supposed to do. That's what a smart investor does. So, that to me, true freedom doesn't come from just financial. True freedom also comes from not worrying about what people think, right? And when you can separate that and get away from that, man, that's a level of freedom that brings a lot of joy to your life because that's coming from people that don't know what they're talking about in a certain field or industry, because any investor is going to do the same thing. Any investor worth any quality is going to say, I'm going to sell at tops and I'm going to buy at bottoms. It's not rocket science. It's actually a very simple concept. What actually messes people up is that immaturity of not being open-minded to what is their environment is, and then is saying stupid things like that. I mean, that is stupid, I have to say. And
Well, I will say one thing though. It's kind of a human thing in that I've noticed. So people want to see you do well, but they don't want to see you do better than them. So during a time when I'm saying, "Hey, I'm predicting everything's going to go down, so I'm going towards catch," and they're saying, "Well, you can't predict that. I'm not going to do anything." When it happens, others around me are suffering and I'm benefiting, and they don't like that. But Amazon lays off people, Google lays off people during a trade war. They're protecting themselves by laying people off and cutting their jobs off, right, to save money. That's just the way the world works. And if you have no lock on your front door and you're not protecting your home, then people can come in and take things out of your home and steal from you. When the market drops, that's kind of what's happening. And if you do have premonitions and have the ability to, the trade war was really obviously going to be bad. It's not like I'm the only person in the world that knew that, but the average person was the deer in the headlights and they just didn't do anything. And so I think that, like I said, if I buy a house and it's 2,000 square feet and my buddy buys one that's 2,500 square feet, I'm supposed to be jealous and hate them. I don't think that way.
Yeah, well,
right?
again, but that leads to, in my opinion, that's a level of maturity or immaturity. Because I'm going to be honest with you, when this is all said and done, and I'm talking in the next months, that we come to some kind of completion of this bull cycle. Okay, I'm not going to sit there and say to you or to Adrian, "Hey, how many X's did you did? Did you?" I was gonna get a little bit flagrant with my words, but did you do well? That's all I care about. I want you to do really well, Mike. I don't care. I don't know how much you have invested. That's not even my business. I don't know how much Adrian has invested. Again, that's not my business. My thing is, I want to surround myself with people that are successful. So that way, you see, that's a small mindset. It all comes down to mindset, right? Being successful in anything comes down to mindset. And if you can surround yourself with, my father always told me, and I've always remembered this. He's like, be the poorest person in the room. Be the dumbest person in the room, because you're likely in the right room. If you're the smartest person and the wealthiest person, you're much likely in the wrong room, because that's going to drag you down, right? Because you're going to be in. So I look at that and say, I don't even want to surround myself with people like that. And we wouldn't even be talking on a daily basis if I wasn't rooting for Adrian and if I wasn't rooting for you, Mike, because then that means me and you, the three of us, could be having a fantastic life in the next months to years to so on. Because if we surround ourselves with that like-minded, then we're all going to benefit from it. You see? So I hope anybody that's listening to that would not be jealous of another person. Like that is a small mindset. It's going to keep that person down. And that's a really important part of, any success in your life.
Well, and I'm gonna add this, and so me and Paul and Adrian, we've become like best friends in the past year. We get along amazing, and growing up, you kind of fall into this media type thing, and maybe amongst your friends and family, where you're like, oh, so and so got a job making this much, so and so has a house that's this many square feet, and you kind of feel like you're less than, and you're supposed to aim for as much as them or better, the keeping up with the Joneses effect. And I saw that happening in my friends network. I saw that happening in my family network. So you're kind of like, well, I guess this is how life is, and I'm supposed to feel that way too. But I matured out of that. I just said, I don't really care. Like when I went to the gym, I never cared if you could bench press more than me. Like however much you can bench press is good for you. And however much I can bench press is good for me, as long as I'm healthy, right? I just want everyone to be healthy. I don't care how much weight you can push. So I kind of look at it as an insecurity. Like if you need to know that you bench press more than me, why do you need to know that? Like there's an NFL player that can bench press more than both of us combined. Like who cares? And if you buy a house that's bigger than mine, Bill Gates has a house bigger than you, who cares? Like, it's an insecurity that you need that validation. And what I found was in my 20s and my 30s, I dealt with those issues and they're gone. Okay, I don't have any insecurity for any of these things anymore. And Paul pointed something out. We have never once asked each other, not once, how much do you have in your crypto account? You know why? Because, and I want to word this correctly, we don't care who has more. We just care that how is your portfolio doing? Are you up 20%? Are you higher than you were last year? You know, what do you think is a good investment? Because at the end of the day, if Paul makes the most and Adrian makes the second most and I make the least, if we all make money, we're happy for each other. And that's all that matters because, you know, we love each other. We care about each other. We just want everyone to do well.
Right.
Right.
And I think it's important, like you said, to have that support network and find that the group of friends that are, you know, have that same mentality, right? So like kind of investing in yourself. And if you do find yourself kind of being jealous of other people, again, you're probably in the wrong room, or you just put your head down and just kind of work at it, right? And hone your craft like the three of us have over the past few years, right? Like we've just like been working at this and trying to learn, read the charts, you know, and kind of figure it out for ourselves, but then like bouncing ideas off each other as well. So I think that's it's important to find that network, as both of you were saying. So that I love that you have that group, Mike, that weekly group that you do. I think that's very inclusive and supportive. But I also love the group that we have too. So it's great.
Another thing to throw out there too, I don't know who said this, but you are the sum of the 5 people that you talk to the most in your life. So if you're around really negative, pessimistic people all the time, you'll become insecure. If you're around people that always show you their Gucci and their Lamborghini and make you feel like you're less than them, you're going to become more insecure. And I mean, I think I can speak for you guys. We've surrounded ourselves with different people. Now, we might interact with some people that think that way, but the people we choose to be closest to don't act or think that way. And it allows us to have more of a forward direction and more clarity. And I don't want anyone to be offended if you're into nice stuff. I mean, we have some nice stuff too, but it's more about if you need to have everything better than your neighbor, that's a problem in my view. I think that that's something that you'd live a happier, better life if you could not really compare yourself to others. That's my personal view. So yeah.
You do have the nicest apartment though. Looking at
I have a really nice apartment. Like when this bull cycle done, this is gonna go to an engineer and become a reality for sure. Right here, I've got the Bitcoin punching bag. I'm gonna beat the crap out of that thing when I get it. So let's get back on topic here, guys, in terms of what's going on right now. That was a great conversation. I hope people really appreciate that because we don't want to offend people, but some of the stuff we said will offend someone. That's just the way it goes. But we're not saying it to offend you if you're listening. We're just being ourselves. We're just being honest about how we feel. And we are not the sensitive type of people. We joke with each other constantly. And we're just sharing our real opinions and our experiences and how we've grown as people. And we're trying to tell you, we think that we're on a better path than we were before because of what we're doing here. So now I'm going to share the screen again here. So, we were talking about what's going on in the world here. We got Trump and his tariffs and everything. But what happened was in April, we had the announcement that China, they were going to have their tariffs lowered substantially, okay? And we actually had them lower the tariffs from 145% down to a much, much lower level with China. And then you could see here that Mr. Besant and the Chinese representative there, we actually have a China trade deal that is, all but complete right now. China's leader just has to stroke the pen and it's done. The UK has made a trade deal. I believe Vietnam has made a trade deal. Europe is saying they're ready to make a trade deal by the July 9th deadline. Trump paused tariffs for most countries for 90 days. And between now, July 4th and July 9th, we're probably going to expect a lot of deals to be tabled. And we have a lot of things going on. And what else do we have going on? Paul mentioned it. As of a day or two ago, I believe it was just yesterday, the big beautiful bill is official. Now, what is the big beautiful bill? The big beautiful bill is something that was proposed by Trump, and it encompasses a lot of different things concerning EV vehicles, spending limits, money printing, and all kinds of other things. And this is something that became official because Trump demanded that the politicians in America get their crap together and get this done by July 4th. And we're recording this on July 4th. So this is a done deal. Now, here's what I want to bring up for discussion with you guys. So, again, we're happy, from an investor's perspective that the big, beautiful bill is passing. But I remember conversations with you guys for weeks now where we're like, this is pretty stupid. Like, they're loading up the next credit card, they're raising the debt, but we have no control over it. They're going to do it regardless of what we think. So we're just viewing what they do and we're reacting with our investment portfolio accordingly. It's not our fault that they're doing it. But this is, I affectionately call this man my Uncle Ray Dalio, my favorite economist on earth, okay? Very well-known guy. As soon as the big, beautiful bill was passed, Ray Dalio sounded an alarm on soaring U.S. debt, warns of big, painful disruptions, okay? Now, a lot of people, when they look at Ray Dalio, they say, oh, he's always doom and gloom like my grandpa, and a broken clock will be right twice a day and all this crap. That's crap, okay? So here's why it's crap to me. In 2020, at the beginning of 2020, when they printed $2 trillion, Ray Dalio gave a warning just like this. And whenever he would go on CNBC in 2020 and 2021, CNBC would laugh at him and make fun of him and tell him how wrong he was because we were in a huge bull market. So clearly Ray Dalio's wrong. There isn't big declines coming. But when Ray said that in 2020, he didn't say this month, he didn't say this year. He said by 2025, we're going to have a big crash. 2022 and 2023, his crash came. He was correct. So right now, he's warning us again. I think we're going to have a big, beautiful bull market right now, and the TV will call Ray Dalio wrong. But I think in the next few years, we probably will have another downturn, and that's what he's talking about. Paul, how do you interpret stuff like that when you're hearing this? Because you're all happy and excited for this bull market, but I know you understand the realities of the ebbs and flows of the market. So walk us through how you're handling this. What's your preparation? What's your kind of loose game plan on Ray Dalio's fear of an upcoming drop in the coming years?
Yeah, well, I like Ray Dalio very much, and he's actually known for his major macro cycles, and what he's really concerned with is the devaluation of the global reserve currency and how that's going to affect the global markets. So when you look at it from an investment standpoint, or from my investment standpoint, am I a fan of the big beautiful bill? Yes and no. Okay, and again, it's just a matter of not getting emotional about it, because you have guys like Elon Musk who's getting very emotional about it, saying this is going to destroy America. And he's not wrong, just like Ray Dalio's not wrong. And I look at this and say, well, in the short term, so in the next months, and we're in July right now, for the remainder of this year, I'm going to remain very bullish, probably into the very first part of 2026. I'm going to remain very, very bullish. And it will be because of what this big, beautiful bill is going to bring to the table, as far as the amount of liquidity that's going to come to the markets, that's going to inflate the markets. So it'll inflate real estate, it'll inflate your stocks, it'll inflate your crypto. It's going to inflate a lot of things, which is good in the short term, because as investors, we want to take advantage of that. If you want to call us greedy, go ahead. But we're just looking at it from that perspective, so we can benefit from it. But then we can benefit from it on the other end of it too, because if we can see the tea leaves, so to speak, right, then we can say, all right, we're gonna potentially sell at when the market seems ripe to be sold. And then if we do get a crash, we're going to put our fiscally responsible seatbelt on, as Mike says, and we're going to ride that down. And then we can buy cheap stuff with it, you see, and we can benefit ourselves. We can benefit our family. We can benefit our friends. We can benefit very much from that. So I look at that and say, I'm just looking at it from a neutral perspective. I'm Switzerland when it comes to whatever's around me, right? And so the big beautiful bill, I think it's terrible for the long run. There's that proverbial concept that we say is we're just kicking the can down the road, and that's exactly what this bill is. It's just kicking the can down the road to create bigger problems in the years to come, and that's what Ray Dalio is essentially saying. And this can is being kicked now for a very long time. You can only kick it so long before there's major decimation. And I think you do have to. We look at cycles. We look at the 4-hour chart. We look at the 1-hour chart. We look at sometimes we even throw charts together when we're looking at the 30-minute chart sometimes and say, like, what's going to happen in the next hours. But that's a rare thing. We look at the weekly chart most of the time to see how the market structure looks. Mike popped that up on the screen near the beginning. That was a weekly chart if you looked at it. And then when we look at bigger cycles too, and what you have to remember is, we did have a major crash, but we came out of it really quickly. Well, what happens if we go into a major crash and we don't come out of it really quickly? This is the things that you have to take into consideration. You have to look at history, because history does rhyme as well. And so is there going to be a repeat of like 1929? Type thing. And if anybody understands what happened in 1929, there was not a recession, but there was a Great Depression. It's known in history as the Great Depression. And people, when that began, people didn't realize they were in it. It was only deemed a Great Depression when you look back at the history books and you say that was really terrible. Okay, so that's kind of like what Ray Dalio is kind of, I think, foreseeing, is there's going to be some kind of downturn, and how prepared are you? This is the thing I think you have to look at. So can you take advantage in the short term? I'm going to try to. So when you say, Paul, how is your outlook? I'm going to try to take advantage of this. I'm going to do my best. I have good people around me, so I'm even more confident. And then, I'm going to take advantage of whatever downturn happens, whenever it happens. None of us know. Nobody really knows when stuff's going to happen, but you can educate yourself, and I think that's everybody's responsibility at the end of the day. Read articles, educate yourself on crypto cycles, educate yourself on macro cycles too, like longer cycles. It's really interesting stuff. It's fascinating, and it empowers you too, because when you can be empowered, then you can again be a little more confident when people get more emotional. I like when people get emotional because I can sell them stuff.
I think it's important to remember that the stock market, crypto markets, those are all forward-looking mechanisms, right? By, at least 6 months, you'd say, right? So when you have events like this, the big beautiful bill and money printing, right? That's going to be reflected in the stock market first, and in the crypto markets, before you're going to actually see that in the actual economy, right? So I think Lynn Alden put it very well, is that when they print money, you're going to see inflation in assets first, right? That's where you're going to see the inflation, and then you're going to start seeing it in the consumer products, all the groceries, all the consumer products that the CPI measures, right? You're going to see that after you see it in the stock market, right? So, we understand this again just by studying history and cycles, right? And so that's how we're going to take advantage of news like this, right? We know that in the short term, okay, we're expecting a hyperinflation of assets, and the economy won't feel it yet, but then over time, right? as the money printing is dispersed into the economy, then that's when you're going to get inflation of our groceries and our cars and everything and all the products that we use every day, right? So and again, that when inflation happens, then they're going to have to, raise the interest rates a little more, and that's when you start getting your recession talks and all that, right? So that's kind of what we're expecting. Again, we don't know when that's going to happen, but we know that that's kind of the order of operations almost, right? And so that's how we can kind of prepare ourselves in the back of our minds.
I'll tell you a really good analogy for that, Adrian. So, let's pretend you have some people that go to the dentist and they've never been at the dentist before. Okay. Now the dentist knows exactly what's going on, just like Ray Dalio, right? He's like an economic dentist. And when the dentist gives you the Novocaine shot in your mouth, right? He's going to go and maybe pull a tooth out or something. That dentist knows that you're going to go numb. He knows you're not going to feel anything later. You're going to have numbness in your mouth. And so the dentist will react first, right? The same thing in the economy. The economists and the hedge funds and Larry Fink at BlackRock and Mike and Adrian and Paul, we know what it means when they print this money. We know what it means when they raised rates in 2022. So we react right away as investors. So Adrian said stocks go up right away when you print money and go down right away when they jacked up the interest rates in 2022. But during the pandemic, you didn't see the price of everything go up right away, because when the dentist gives you Novocaine, right, you get numb later, right? And when you inject money into the economy and you lower interest rates, you have to give out a bunch of mortgages and a bunch of lines of credit, and people got to spend it and bid the prices of things up later. But if you're an economist or someone that studies things the way we do, we already know that's coming. Like, if your buddy starts taking steroids, he's going to have big muscles in a few months. It's coming, right? Like a bodybuilder. And so I think that us having those type of premonitions is important. And in 2008, I remember I had 10 grand in the market. I lost half my money. I sold everything. And I said, what the hell just happened? How do I learn charts? How do I learn basic economics at a high level so this doesn't happen to me again in the future? And I'm proud to say that in 2022, when they announced the rate hikes, I went cash and I let it crash without me. It's because we learned from this stuff. And along the way now, me, Adrian, Paul, many other people, when they've announced that rates were coming down and money is being printed and pro-crypto president and all these things, we are like the dentist that knows what's coming financially. And that's what Ray Dalio is talking about. So, I think that's really valuable stuff for everyone to be aware of there. So I want to highlight one thing that Paul said here.
Economic dentist. I'm going to remember that one.
That's a good one. That's a good one.
Ray Dalio, the economic dentist.
Ray Dalio, DDT. So Paul mentioned something about M2 money supply, and some of you might be wondering what that is or what that means. So this chart here is a chart showing the global M2 money supply. Okay. Now, what does that mean? Okay. What that means is all of the investable money and capital in the world, cash, lines of credit, assets, treasuries, everything combined, how much cash is there available in the world right now? This is pointing at $113 trillion. Okay. On the left side of your screen, it says 113 trillion. So here's the one thing that is a little tip or trick for the viewers, and me and Paul and Adrian have been using this. So right now there's an area of the chart here that is circled, and you can see that there's a green zigzagging line here pointing higher. Okay. What that means is this. Okay. You can have a weatherman tell you, we think the weather is going to be like this for the coming few months. This is like a financial weather forecast. Okay. And what they're saying is, we believe the total amount of money in the world is going to be way up here by September. Okay. And what ends up happening is the blue line on your chart, the blue line is the Bitcoin price. And the blue line will eventually follow the green line higher. And you could see it's pointing at $180,000 Bitcoin. And for those of you who have not followed this before, right here was right before the Trump, or no, I'm sorry. I think right here was right before the Trump election. Okay. And what will happen is the green line will go up first, just like on the right side of your screen over here. And the blue line then went up as well, and Bitcoin ended up going up with the green line. So it's kind of a nice way. It's almost like a fish finder that lets you see where the fish are under the water. And right now, this green line is pointing higher. The big beautiful bill was passed. They're going to print between $5 and $7 trillion, and it's kind of a follow the leader thing. Other countries can't let the U.S. get too far ahead, so now they got to print money eventually. They got to lower rates eventually, and the Bitcoin price will go up. So, don't blame me if it doesn't go up, folks. I can't predict if something weird happens in the world. But right now, the three of us and a lot of people are of the opinion that Bitcoin is going to follow that green line higher and go towards a couple $100,000 this year. And this is a nice tool that we use. And again, it's kind of like you have some other people that are fishing buddies of yours, but we have a fish finder. And that's how I like to look at M2 Global Money Supply. So how have you found the transition, Adrian? Like from 5 or 10 years ago, I would assume that similar to me and probably Paul, we didn't have a lot of these skills before, right? Like how often did you even see money printing 10 years ago? It was kind of new. M2 Money Supply? I didn't know what M2 Money Supply was. Tell me about your transition over the past 10 years from, the old Adrian and the old Mike to like the way we're talking today. How did that go for you? And like, how do you feel about having those tricks and tips now?
Oh man, it's a whole different world for me. Growing up, my parents never talked to me about money, or the economy for that matter. I actually do remember like quite vividly when I was younger, like a teenager. I was just like, what is this government debt even mean? Or like, how can a country be in debt? Like I actually asked those questions, but I don't think I ever got a clear answer from any of the adults in my life. ChatGPT wasn't around then, so I couldn't access that, right? But seriously, like I've learned so much from YouTube and the internet. So I think everyone or a lot of people have seen this M2 money chart from Raoul Paul. I think he was the original kind of. He was the person that put that kind of together. And by the way, he says that there's an 80% correlation, which is pretty awesome. And again, it doesn't, like Mike was saying, all we care about is the direction, right? It's going up and to the right, right? And if it's 80% correlated up and to the right, we'll take those odds, right? It's never a sure thing, but we like our chances, right? When something's 80% correlated, and I think it's only 80% correlated because it sometimes outperforms. I think if the NASDAQ follows the M2 money supply by like 95% or something like that, right? So it's even has an even tighter correlation to the M2 money supply. And so I just learned so much over the past 5 years through YouTube, and it's just brought a whole different perspective on my investments, on life. I did your course on technical analysis and reading charts, and that's been the basis of my knowledge and giving me confidence in being able to read the charts. That's very important to me because I think charts are everything, right? As Paul was saying before, show me the charts and I'll tell you the news, right? So it doesn't even matter. I don't even care what the news is. It doesn't even matter because the charts are probably going to point towards that direction, and it doesn't even matter what the actual news is, right? And so again, we're able to have that confidence to cut out the noise, as we said before, just because we know how to read the charts, right? And so having that skill set is highly valuable and super important to me. And it's changed everything. It's changed my whole investing outlook and career and everything, right? So I would be a fish out of water if I didn't know how to read the charts or didn't didn't have an understanding of macroeconomics. Like you're literally just throwing a dart blindfolded if you don't have any of that knowledge, right? So I think I put the odds kind of in my favor. Of course, I've lost, some money learning here and there, and that's the best way to learn, I feel. But hopefully, that I've developed this skill set, I'll have a net gain over my investing career, investing life. Yeah, so that's the whole hope. And yeah.
And one thing I want to say too is, like Adrian mentioned, he took my training course during the pandemic, and when things shifted during COVID, I went from a full-time property manager to a full-time investment coach, and I completely changed my whole worldview, and it really opened up a whole bunch of opportunities for me. And it's like we didn't even, I'm glad that Adrian brought that up. That I didn't tell him to bring that up. He just brought that up, right? But
Yeah.
like when I did my coaching with people, I kind of felt like a basketball coach when you finally see your players, run a certain play or dunk that basketball, score that goal on the hockey rink. And now Adrian sends me charts, and it's like, we wouldn't dare invest in something without first analyzing the charts. And hey, Mike, what do you think? Hey, Paul, Adrian, what do you think? And it's an invaluable skill. Like, if you don't know how to fight and you're picking fights with people, you're in trouble. You probably need a few boxing lessons if you're going to do that. If you're going to invest on pure emotions, oh man, you're going to have a bad experience. So, Adrian was a really diligent student. He actually practiced his charts. He kept up on things. We share with each other. Paul's great at charts. Like, we're able to throw all this stuff around, and you end up having a clearer vision on things when you study the charts and when you understand the basics of economics at a high level. That's what we're really aiming for here. So now with Paul, you got a nice Italian last name there. I'm of an Italian background too. I'm not going to speak for you, but a lot of the Italians that came over from Italy, they didn't talk economics. Like, that's not their thing. Okay. You put your money at the bank for 5% interest, nice and safe, and you keep it there. Don't buy rental properties. Don't buy stocks. You're going to lose your money. They remind you of 2008. They remind you of the Great Depression. They tell you how interest rates were 18% in 1980 and all this stuff. So how, first of all, was your experience like that? And if it was, how did you shift all the way over to being an investor the way you are?
I don't know. My parents think I was adopted, so maybe I was, or mixed up at birth. I think they picked up the wrong baby. That's what they always say, because I run very different than the rest of my family. And so what you described was how I was brought up. That Italian immigrant. Both my parents were born in Italy, and they knew nothing about, and they provided a fantastic life for me. And so from my perspective of that is what they were able to provide for me as a base. I have to live my life my own, to beat at my own drums. And if I think something doesn't smell right, I don't want to go that way, And so if you look at my brothers, they beat to that kind of, I have two younger brothers. They beat to that traditional drum. All my cousins my first cousin circle, they all beat to a very traditional drum. And then there's myself, and I just looked at things very differently. And, I went into business by myself, at a very young age. And I went through a lot of ups and downs. And when I first invested in crypto specifically, I messed up a lot. I lost a lot of money because of the volatility. And something really interesting, I'll get to that in a second, was I would always look to whatever the news was to kind of guide me. And I didn't realize my biggest maturity was, and this even happened before I met you, Mike, with Adrian and him influencing me in a positive way of saying, like, look at the charts. He would send me charts, and of the three of us, I'm not a chartist in any way. I've learned to do it, and and I'm still learning. And I think you have to have that mindset. But Adrian would always say something to me, and he would always be like, "Look at the charts. The charts are going to tell you what's going to kind of happen, right?" And I'm like, "How is that? That's impossible. The news is going to tell you what's going to happen. The news. And it's funny because I purposely do something right now. So I look at things very differently now. I'm like, the charts show you ahead of time what the news is going to be, and it happens every time. The trade wars, the coming out of that capitulation with the trade deals, now the big beautiful bill, even that last little correction we had from the all-time high of 112 down to 98. What happened in there? There was a war. We had a war, and then what happened? That war, we came out of it in a V-shaped recovery. So. That's where my maturity came from, and it wasn't from my family in any way. That was from self-education of mistakes I've made, surrounding myself with good people, and learning, constantly learning. And the one thing I like about our group is our chats. If you miss 2 hours in our chat, you could have 200 messages that fly by. Now, some of it's
That's me.
Some of it's joking around, but we talk about a lot of stuff. And something I do purposely is I follow Twitter very, very closely. And I'll tell you why. Because I can gauge sentiment from there. I can gauge it, and I watch because that, to me, that's an indicator. So when I see people getting really, really excited, I'm like, something's is getting close to while they're looking at probably getting into the market, people like us are looking to get out of the market. And when I see them being
and we're expecting bad news.
Right, exactly. And when I see sentiment in like the most fearful area, like I can see it. I don't just use an indicator, the fear and greed indicator. I actually follow the crypto Twitter. I actually pay to a monthly. I'm in a crypto Discord group for one reason, not to benefit from them. It's a basic beginner group. I gauge the sentiment in that group. I use it to gauge the sentiment, and they're very new to crypto investing, and I look at that as an advantage for me because all they talk about is the news, and I recognize that because that's who I used to be, and I don't want to be that person. You kind of get where I'm going, and where to me that's a very valuable tool because I can actually. And when you get a guy that has chart experience and he's talking about, hey, there's going to be a correction, and I agree with it. I don't actually talk in that group whatsoever, but they all gang up on him. No, that's not going to happen. We just got this great news. It's unbelievable, and it works every single time. So I think it's really important that in your maturity as an investor that you do learn basic. You do invest. The biggest investment you can make, and I'll say this every single time to anybody, is not in the crypto world, is not in real estate. The first and best investment is in yourself. If you don't invest in yourself in learning, then you're kind of misguided, and you're just going by luck. And if you actually invest in yourself first, and if you invest in yourself by learning and surrounding yourself with good people, then you're going to actually be more successful in the macro, in the long term, in the course of your life. You see? So that's my perspective, and that's my background.
Yeah, I agree with everything you just said, and your journey, the way you exactly described it, is exactly my journey. I was always, like everyone else, reacting to the news. Oh, you can't read the charts, you can't do this. I play guitar. Before I actually learned to play the guitar, I kept saying it's going to be impossible to play songs on the guitar. And then eventually you're like, oh, wow, I actually can play songs on the guitar. And that's how charting works. I'm going to do one final little exercise here to kind of wrap up what Paul just said. He brought up a really important point, and Adrian touched on it. So for the viewers watching right now, you could see my screen. This is the candlesticks chart here. And what I'm going to show you is how myself and Adrian and Paul has followed along with us. What are we talking about? Like, how do these chart patterns predict timing the market? So I'm going to show you. Okay. So I'm going to zoom out right here and I'm going to get a drawing tool out. Okay. And when I'm done drawing here, what you're going to end up seeing is that there are some patterns in place here. So I'm going to just drag this back here, and Adrian will know what I'm doing here, and I'm sure Paul's following along there as well. So, you know, what I'm doing is I'm basically drawing the upper and lower boundaries, and it's bouncing in between these lines like a pinball. Okay, it's like you whipped a pinball down your hallway in your house, and it keeps bouncing against each wall. Why is this important? Because this was the US election, okay? And what did me and Paul and Adrian and a lot of people say? We know, I teach this in my training course. Adrian, you know, maybe he knew this already, but in my training course, I teach people after a US election, other than very rare occasions, like the crash of 2008, we're in the middle of a crash, okay? But other than a couple examples like that, we go up in value after a US election. Stocks, you know, cryptos now, all of this stuff. So why is this important? Because the entire time it was trapped in this pattern, we were unemotional. We didn't care. And when the US election came and it started creeping above this pattern and Trump was victorious, we just simply knew we were going to go on a mega rally, and we used that to our advantage. Now, for anyone out there saying, oh, you just got lucky and you won't be able to do that again, I'll show you that's not correct. I mean, you know, judge us by the performance in the coming months here. So after a big rally, then you could see that it crashed down. This is the trade war crash, okay? Now, this is going to spook out some people, and they're going to be like, holy crap, how can you see this? But Adrian sent me a chart a week or two ago about Ethereum. Paul has seen all of our charts, and we agree on this, okay? So in my training course, I teach people that when something drops, you look for a bottoming pattern after a crash in the markets, okay? This is called a left shoulder, and I'm tracing the movement of the price. This is called a head, and this here is a right shoulder. Think about it like a vampire or a bat hanging upside down, right? This is your shoulder, and your head, and you're hanging upside down from a tree here. This is called a bottoming pattern. And with the big, beautiful bill passing right now, I'm 90-something% sure that we're going to go monumentally higher from this bottoming pattern. And now I'm going to show you one more thing, okay? So I'm going to bring you back to 2022. And I'm actually going to go, let me look up the SPX here, guys. This is the S&P stock market, okay? And just so you know, it's not just Bitcoin here, okay? So this is the 2022 crash on your screen now, okay? In my course and in my Invest Like Mike group on Facebook, I talk about wave patterns. 1, 2, 3, 4, 5. And you might not know what that means, but if you follow my Invest Like Mike group, and I know me and Adrian and Paul talk about this, when you have a downturn that's very meaningful, it often happens in 5 phases. And I tracked this live with my members the whole time. And when we got here, I said, if you want to start buying in chunks now from late 2022 onwards, I think that'd be a good idea. And in the meantime, I'm going to look for a bottoming pattern. Now let me zoom in, okay? When you zoom in, and again, I'm going to be better at doing this than some of the people watching in the audience here, but you have a left shoulder, you have a head, and you have a right shoulder over here. And out of that bottoming pattern came a big rally. That's the exact same setup that we have right now. And you could see that we got a really big rally out of that. So right now, when we're looking at the Bitcoin chart, we are seeing that. And if you were to go to the Ethereum chart, you would end up seeing the same thing. So I think it's really, really valuable that you can use these chart patterns to your advantage. And right now, I'm just going to trace it one more time. We have an upside down head and shoulders pattern, and we just got a really big catalyst of $5 to $7 trillion being printed, and the M2 money supply is pointing higher, and all kinds of other reasons. We are super, super bullish on Bitcoin and cryptos right now, and the charts is a big part of it. Okay, so
Look at the charts, Mike. I mean, isn't there even more confluence right now? If you bring that chart back up again, I think you can even draw a cup and handle pattern on that. I think you could. There's even a bull flag. If you look at it from the 74K correction up, you could probably even see a bull flag forming too, like similar to what happened in 2024, a smaller one.
Yeah.
But there's a lot. So what Mike is saying, there's with the M2 being the backdrop of the direction that we know it's going to go, plus the catalyst that just happened, and then if you look at the charts, yeah, it's showing all these bullish patterns. We're very confident it's going up, and it's not by luck. That
even during the trade war crash here, it was bouncing around in this pattern, just like this one over here. And then when he started pausing tariffs and making deals, isn't it magical that we popped out of my pattern? Okay. And right now, even in the short term, if I just zoom in here, this is what Paul's pointing out, is, there's a little short-term pattern right here that we're trying to pop out of right now as well. And, we use this to our advantage. It's like, hey, we've been trapped in this pattern for weeks upon weeks. They announced the big, beautiful bill, and now we're going to break out of this pattern. It's very logical once you're able to see and draw this stuff on the charts. And that's why we work together as a team. And that's why I share everything I do in my Invest Like Mike group, because even if you can't do it yourself, let me do it. And then by me explaining it to you over a long period of time, you'll understand what the heck I'm talking about. And that's really what I'm trying to do here. And I'm really, really glad that I met you guys a year ago. Like, Adrian invited me onto the podcast, and we talk like every day. And, it's funny, like, we're not agreeing with each other all the time. Like, actually, if we say something and someone disagrees with it, we'll point it out in a healthy way, and we'll deal with it, and we'll move on. And I really, really love that, we have each other's backs, and that we all have a similar mindset on how we're approaching life and the investment game. So I really appreciate you guys for that. Yeah, it's good stuff.
Thank you.
Thanks,
guys,
Mike.
We're going to cut it off there. This was an awesome discussion. I'll get this up to YouTube, and I think there was a lot of valuable insights on, life metaphors, investing metaphors, and kind of telling everyone our stories. And I think there'll be a lot of great insights from here. So here's to cheering on a really big bull market for our portfolio this year, guys. And when things change and hopefully Bitcoin's way, way, way higher, we'll do another podcast together to recap this stuff, and we'll share it again with the audience. Okay, so thank you everyone for joining us here on the Stock Talk podcast, and we'll see you on the next one. Take care.